Hi, everyone. Welcome to Ask an Expert. Today, I'm going to be chatting with Bonnie Wheeler, Home Financing Advisor with Scotiabank. So I've asked Bonnie to come and speak to particularly the buyer clients. Everybody's a little bit nervous about interest rates, what to do when they're shopping for a mortgage, wondering if the market's going to continue to decline. There was an article in the Global News from Royal LePage yesterday stating that if you're looking for steep declines, that's probably coming to an end and that we're not going to be likely seeing that. We are perhaps at bottom or near bottom. So I have been urging my buyer clients to not wait too long, because when things do change, they can change very, very quickly. And you don't want to get caught in that. So Bonnie, thank you for being here and for answering some really important questions for clients.
Great. Thanks, Kathy. So today I'm going to talk about the Bank of Canada's prime lending rate and variable rate mortgages based on prime. So the Bank of Canada looks at their prime lending rate 8 times a year throughout each year. They decide then whether to raise the prime lending rate, lower it, or leave it exactly where it is. Based on the Bank of Canada's prime lending rate, then the financial institutions, we set our prime lending rate. So it would go up in tandem, could go up, could go down, or we would leave it where it is as well. Products that are based on the prime lending rate are you could get on your lines of credit and as well your mortgages. So today we're going to talk about mortgages based on prime.
So Bonnie, is this a good time to go into a mortgage based on prime lending rate?
It is, and especially if you want to get a variable rate mortgage through Scotiabank.
Why is this a good time to start a variable rate mortgage rather than a fixed rate mortgage?
So, Kathy, throughout 2022, the Bank of Canada has raised the prime lending rate, and fixed rates have also been on the rise. Currently, all indications are that Canada is near or at the peak of where the government wants prime to be. So if you take a variable rate mortgage now, the rate will in all likelihood stay at that rate without increasing further, which is great news. However, even better is that once Canada's economy settles and we get inflation down a bit, which will hopefully be over the next year or so, your variable rate mortgage will decrease. This is different than a fixed rate mortgage, in which your rate stays the same for the length of the term. So, for example, if you chose a 5-year fixed rate, your rate will stay the same for that 5 years, even though rates may decrease. And that could be the variable rates and fixed rates, but your rate will stay where it is. And they could decrease substantially.
So Bonnie, why should clients choose a Scotiabank variable mortgage?
So at Scotiabank, when prime rate decreases, yes, your interest rate will decrease, as we've talked about, but also your payments will decrease. So with prime lending rate near or at its peak, meaning prime should stay where it is for now, and then when the Bank of Canada starts to decrease prime rate, not only will your mortgage rate decrease, but your payments will also decrease. This saves you interest costs, lots of money there. And also it saves you and puts money in your pocket.
Money in your
Your
pocket.
payment is also going to decrease.
Yeah, and people like that. Money in their pocket is good for our clients for sure. So that's great information, Bonnie. Thank you very much. What's the best place for people to reach you?
Sure, Kathy. You can either call me direct on my business line, which is 905-546-7616, or you can email me at bonnie.wheeler@scotiabank.com. And you can also find me on the Scotiabank website under Home Financing Advisor.
That's great. And if you forget any of that stuff, you can contact me and I'll put you in touch with Bonnie. So thank you again, Bonnie. That was great information. And we'll chat soon.
Sounds
Take
good.
care.
Thanks, Kathy.
Bye-bye.
Bye.